Welcome to today's What Will Move the Market show. I'm your host Prem. It's Thursday, January 8, 2026, and here is everything you need to know as the markets open for today. Wall Street had a tough session on Wednesday as the three-day rally finally ran out of steam. The Dow Jones fell almost 1,000 points, dropping 0.94% to close at 48,996. The S&P 500 also slipped 0.34%, settling at 6,922. Meanwhile, the Nasdaq managed a small gain of 0.2%, hovering just above 23,584, thanks to strength in tech stocks like Alphabet. The big story yesterday was President Trump's announcement on housing policy, where he proposed restricting large institutional investors from buying single-family homes. This sparked heavy selling in the real estate and home builder sectors, with those stocks taking a beating. Financial stocks also stumbled, with major banks like JP Morgan and Goldman Sachs down more than 1.5% each. Energy also faced weakness as crude oil prices softened. The broader theme was profit-taking after a strong start to the year, with geopolitical tensions keeping investors on edge. Let's move to the Indian ADR space, where our homegrown companies traded mixed overnight. Infosys showed some strength, gaining 0.72% to $18.23. ICICI Bank outperformed even more impressively, jumping 1.65% to $31.38. However, HDFC Bank retreated slightly, losing 0.69% to $33.20. Reliance Industries slipped a modest 0.3% to $67.2. Overall, the ADR performance suggests selective buying in IT and private banking names, while the broader heavyweights like HDFC face some selling pressure. This mixed picture is a key cue for Indian investors to expect stock-specific action when our markets open. Moving to the Asian markets, we're seeing a mixed picture this morning. Japan's Nikkei is down 0.62% to 51,555, suggesting some caution among Japanese investors. However, Hong Kong's Seng is showing resilience with a 0.2% gain to 26,312.5. The Shanghai Composite is essentially flat, with a marginal 0.05% rise to 4,679. The really important number for Indian traders is the Gift Nifty, which is currently trading at 26,186, down 0.15% with about 45 points in losses. This downward drift in Gift Nifty overnight is a cautionary signal. It suggests the Indian market is likely to open on a weak footing, and the selling pressure that has been building for 3 consecutive days continues. However, the loss is relatively modest, so we're not looking at a sharp gap-down opening. This is consistent with the consolidation theme we've been seeing. On the geopolitical front, President Trump's comments about India remain in focus. He mentioned that Prime Minister Modi is not particularly happy about the tariffs imposed on India for purchases of Russian oil, highlighting trade tensions that continue to weigh on sentiment. Additionally, Trump's announcement yesterday about restricting institutional buying in real estate could have longer-term implications for global capital flows, potentially affecting emerging markets like India if international investors begin to reassess their portfolios. Gold and silver have been supported by these geopolitical concerns, though as we'll see in the commodities update, today's moves are relatively muted. For Indian investors, this backdrop means staying vigilant about rupee movements and keeping an eye on how these tariff discussions evolve ahead of the union budget on February 1st. On the domestic front, the RBI has been quietly working behind the scenes. The central bank successfully intervened in the forex market on Wednesday, supporting the rupee through dollar sales by state-run banks, marking the second consecutive day of gains for our currency. This is a positive signal that the RBI is actively defending the rupee, which has been under pressure. Meanwhile, new digital banking regulations came into effect on January 1st, consolidating internet and mobile banking guidelines with stricter cybersecurity standards and enhanced customer consent requirements. Banks are working through implementation on this. Looking at flows, foreign institutional investors are continuing to sell, with net outflows of Rs 4,650 crores recorded in the first 2 trading days of January. However, domestic institutions are stepping up, with DIIs recording net inflows of Rs 8,600 crores. This support from domestic money is crucial and is helping cushion the downside. The budget on February 1st will be closely watched for government spending plans, capex announcements, and any tax relief measures that could spark a rally. Market expectations are building ahead of that key event. For today's technical setup, the Nifty 50 is under consolidation pressure at 26,141. On the upside, the immediate resistance is at 26,200, which is a critical breakout zone. If the Nifty sustains above this level decisively, we could see moves toward 26,250 to 26,300. However, the near-term bias is cautious. On the downside, strong support is placed at 26,050 to 26,100, which is a critical band holding the broader uptrend. Below that, immediate support sits at 26,000, which coincides with the 50-day moving average and the rising demand line. A break below 26,000 could invite weakness toward 25,900. For Bank Nifty, which remains more resilient, immediate support is at 59,500, with the index consolidating in the 59,500 to 60,400 zone. A breakout above 60,400 could trigger momentum towards 60,800 to 61,000. The broader structure remains constructive as long as these key support zones hold. In the commodity space, crude oil remains completely flat at $56.39 per barrel, showing no directional conviction. This is a key watch for Indian markets given our oil import dependency. Gold is essentially unchanged at $4,457.50 per ounce, up just 0.03%, suggesting that geopolitical concerns are not driving massive safe haven flows today. Silver is showing modest strength with a 0.6% gain to $78.85 per ounce. Natural gas is up 0.39%, though this is not directly impacting our equity markets. The overall commodity complex is quiet, which typically supports a range-bound trading environment in equities. As we head into today's session, the key takeaway is this. We're in a consolidation phase with the market taking a breather after a strong start to the year. The downward drift in Gift Nifty and the third consecutive day of Nifty weakness suggests profit-taking at higher levels is likely to continue. Domestic institutional support is strong, which is protecting the downside, but FII selling remains an overhang. For traders and investors, the message is clear: stay cautious on fresh long positions unless the Nifty decisively breaks above 26,200 and holds it. Use any dips toward 26,050 to 26,100 as potential entry points if the broader trend reasserts. Keep an eye on bank stocks as they're showing more resilience, and be selective in sectors. The budget in less than a month could be a significant catalyst, so positioning ahead of that will be important. India VIX is low at around 9.95. Indicating subdued volatility expectations, so expect a range-bound and choppy session with frequent whipsaws. Stay tuned for the evening wrap and send in your questions, and please subscribe to this podcast to hear US every day.